Welcome to the Whitwam Wealth Real Estate Podcast. Today's episode is 2025 Wealthy Real Estate Investing.
Welcome to the Whitwam Wealth Real Estate Podcast with Scott Whitwam, your blueprint to financial abundance. Settle in as we explore the mindset and methods for wealth building through real estate.
Welcome back. I'm Scott Whitwam, and today we'll be talking about 2025 Wealthy Real Estate Investing. What I'd like to talk a little bit about is what 2025 is looking like, shaping up to be, some of the things that are going on in our market today on this podcast. I used to do a real estate investor update on a regular basis and always looking at the stats. In fact, it's in this industry, if you want to be successful, you really got to know what's going on in your marketplace. You know, if you're in the southern United States, it may be way different than it is in the Pacific Northwest, and we can't really treat all of the regions as if they're the same. Because real estate investing in any particular area can be affected by state and local ordinances, taxes, the dynamics of governance. Are people moving out? Are people moving in? So there's a lot of things that change and adjust for us in this marketplace. And so I brought some numbers. I don't do a lot of reading on the podcast, but I am going to go over some of the statistics that are out there for our real estate investors, just so you can kind of get an idea. I was reading on one of the information collection sites that I use that the southern United States, so the Florida, Alabama, Georgia areas, maybe even up into the Carolinas, are actually doing really well right now in comparison to some of the other parts of the U.S. I'm located in the Southwest, in the Phoenix area, so we get a lot of information out of Southern California, Arizona, and Nevada. And for myself, for my team, we do most of our investing kind of here in the Southwest U.S., maybe down into Texas a bit. And some things are looking really good for us, I think, in 2025. For those, I was just talking with some people about, where we've come from the last couple of years when the market slowed down and the Fed really got aggressive with bringing interest rates up in about March, April, May of 2022, and how it started to put the brakes really on all sectors of the real estate industry. I mean, it hit construction, it hit new home builders, it hit retail, it hit rental properties. I mean, it hit the industrial sector, it hit, the commercial sector. And then obviously, depending on where you're at in the U.S., it hit it a little bit differently. There's places that here around me where even during these last couple of years, the industrial has grown like crazy as chip manufacturing and technology manufacturing has moved some out of California and some from overseas into the area. Intel is building like crazy, microchip, and then TMC, they're all kind of locating operations in this area. So it was kind of an anomaly because when I talked to some of my investor friends in other areas, they were seeing something that was the opposite happening. We know that there has been a real exodus out of the state of California for people. So I think it was the first time since they started recording these statistics, California's population has actually decreased. Well, a lot of those people are moving all across the southern part of the United States, whether it's Nevada, Arizona, New Mexico, Texas, and then obviously down across Louisiana all the way into Florida. But also Idaho has been gaining a lot of population simply coming out of California just because of the environment that is there for growth. Well, what it's done is it's created a situation where now as we come into 2025 and optimism is starting to increase. In fact, as consumer confidence is coming up, we've seen from the reports from the last couple weeks that finally some of the changes and implementation of some of the policy on the federal level are starting to have some trickle-down benefits, and we started to see inflation finally start to move back downward. after months of ticking up again. Even though we were told the economy was good, inflation continued to rise. The Fed had overcorrected. Interest rates for homes and mortgages went up, but we're now starting to see a pullback on the inflationary rate. One of the other things that's a really interesting factor that we're dealing with right now is that it's a small percentage when you look at it, the total population, but there's a shrinking in government. We've done some podcasts about Doge and how it's affecting the real estate investing market. But those changes that are happening at the federal level with shrinking the size of government and pulling back funds that had been approved to be spent will do a couple things. They're going to lower the inflation rate, and they're going to lower the demand on the taxation rate. They are going to create an environment, we're already seeing it, where with an increase in manufacturing, we've seen that already over $1 trillion in commitments from some of these larger chip and manufacturing companies, including the auto industry and some of these other industrials, have committed to building plants and manufacturing goods in the United States. Also, we see on the energy side of things that the policies that have been implemented, this drill baby drill mentality, is starting to come back. And I saw one of the CEOs of one of the major pipelines say that they're within a few weeks now of being completely operational and ready to go again. Whether we'll see some of the pipelines that were shut down in 2021 come back online as quickly, I don't know. But all of this means more energy production. In 2022, I have several people who worked in the oil industry, whether it was Wyoming, the Dakotas, or in Texas. And in 2021, by the end of 2021, first part of 2022, every one of them that I knew were no longer working in the oil fields, in the oil industry, making a couple $100,000 a year doing stuff in the oil field. And now they had to take alternative jobs, sub $100,000. They had to find some other options that were sub $100,000 in order to, take care of their financial needs. Well, that's a huge hit, and there was an entire industry like that. Entire cities had been built in these areas in order to support the oil industry and the energy industry, the natural gas, and some of these other industries, and those are coming back. And so what that'll mean is we'll see high-paying jobs again in this industry, and these exports are going to bring more money back into the U.S. and deal with our trade deficit. All of that means that as a whole, people are going to have disposable income. They're going to have, we'll say, lendable income. They're going to have income where they can go out and make transactions and purchase houses again, and it's going to increase the market. We're already starting to see those changes. And with the increase in consumer confidence, we're seeing more home inventory on the market. I have a report here from the department. It's from HUD. It's from the U.S. Housing Department. They were talking about residential construction. And one of the things I thought was really interesting is the amount of new completed homes coming on the market in February, up 7.1%. So that means more inventory is becoming available. And one of the things about inventory, we've had such low inventory for so long, it gives buyers now options. There's something else happening in the marketplace that coincides with not only having a more robust inventory, and if any of you guys out there are realtors in the real estate industry, have access to real estate statistics in the areas in which you're investing, what we're seeing all across the U.S. is we're seeing the numbers start to come up. And obviously, in some of these areas that are a little bit more robust currently in the South, we're seeing the inventory levels start to increase. And now we're seeing buyers start to come back in the marketplace because interest rates have actually been on the decline. The bond market has started to turn, I wouldn't say dramatically or drastically. It isn't like the bottom's falling out of the bond market, but the bond market has started to change a little bit. back in September when the Fed lowered interest rates, we saw the bond market take kind of a nosedive real quick along with the Fed rate. But then it became very evident that the information that the Fed was acting on was wrong. And when the Biden administration revised their numbers, they were horrible. And we started seeing interest rates go up very quickly, all the way up to the 7% line for a median interest rate across the U.S., according to Freddie Mac. But what we're seeing now is that the bond rates started to pull back a little bit the last couple of weeks. We're starting to see better interest rates in the marketplace. Week on week, they were pretty flat, but Freddie Mac was advertising the rates were down like at 6.65% on a 30-year fixed mortgage. Well, that's much better than 7%. It can mean the difference between affordability and non-affordability for buyers. So it's bringing some buyers back into the marketplace. Why is that great? Well, if you're a wholesaler, if you're a buy and flip guy, even if you're in the buy and hold market, this is all extremely good news because we need inventory to turn over. And when interest rates drop and people start to move out of some of these multifamily homes, it opens up some more opportunities. They will be backfilled. I think you're going to see people moving out of mom and dad's house. You're going to see people moving out of grandma's basement again. You're going to see people who have been, I guess, co-living, where you got multiple families living in one home. You're going to start to see that change, especially as the job market gets good. Because a lot of the jobs that we saw created in the last year or 2 years were all in the government sector. They were a lot of them were with non-U.S. based residents. But what you're going to start to see is you're going to start to see these people who had 2 or 3 jobs, who are working a lot of part-time jobs in order to keep the bills paid. You're going to see them get more solid manufacturing, more solid opportunity jobs that are going to bring stable income, and they're going to get back to working 40 to 50 hours a week instead of 50 and 60 and 70 hours a week to support their families, with higher disposable income, which means they're going to come back in. And that means they're going to start to buy our flips. They're going to start to buy the properties that are being sold through just regular real estate transactions. And anytime either of those are moving, it increases the real estate wholesale market. And we start to see, too, when real estate starts moving, that oftentimes buyers who have been holding on, even with properties that need to be disposed of for cash, need to disposed of because they've got some title complications and stuff, that more of those are going to open up. So I think you're going to see the wholesale market start to open up a bit, along with the opportunities to flip homes. One of the things in the area where we're at, and I mentioned in the Southwest here, that I would say over the last 2 to 3 weeks, I've started to see a reset in wholesale pricing on properties that are coming across, much more reasonable for the small flip guy who's doing 12 or less flips a year, where he can pick up a home, remodel it, put it on the market, and sell it. I think with a little bit pullback in what we're seeing on some of the wholesalers, some of the I would say more experienced wholesalers, on their acquisition price to ARV, is going to help a lot of these smaller wholesalers or smaller flip guys who have been out of this market. And I know that I've talked to them because we meet at investor meetings and get a chance to talk to some of these guys in groups and go through this. And a lot of them are just been sitting on the sidelines waiting. But I think we're starting to see that as we turning here in 2025, that there's some wealth opportunities for some of these people that have been on the sidelines, and it's all good for us. I really am a proponent that competition actually builds opportunity for all of us. It's the same reason why, I guess, the concept of a mall, the reason why you put all these retailers together in one place is because if somebody's going to the Bon Marché, they're likely to go to a Macy's also, but then they're also likely to go to a chain restaurant while they're there, and then they're going to see maybe a J.C. Penney's, a Sears, and if either of those are even still open anymore, but they're going to have that competition actually brings more people together into the area. Well, it's the same thing for us. As this market begins to move, you get a feeding frenzy, which actually filters down to the common homeowner, and they see opportunities now to dispose of their properties. They see some profit potentials and the ability to now move to a place that they wanted to go. Don't forget, like we talked about, over the last few podcasts this year, there is a lot of pent-up buyer frustration. There's a lot of people who would like to be home buyers, and they're just waiting for a couple things. Homes to get more affordable, which means for prices to kind of level off. In most of the country, we're seeing very small price increases, if any at all. We're waiting for higher inventory, which we're starting to see, and we're looking for lower interest rates, which we are starting to see. And I think that we're going to be kind of in a place where this is going to be the trend based on what we're seeing again in the bond market and the stock market. I think there's some really good opportunities out here for wealth for us, some opportunities to take advantage of this market before it gets too crazy. And I was talking, I think it was on last week's podcast, about why it's important to do this now is because we don't want to be ahead of the wave. I didn't want to do this last October, November around the election, though we were still buying and acquiring properties. We just weren't on full scale attack. We wanted to wait until the wave crested a little further so that we could get in a good position to ride this wave. But I don't want to be late on this wave either. If you're late on the wave, and then it's going to be much tougher. I think by the time we get to the fall, if you're waiting until this fall, going, well, I think I'm going to wait another 6 months. You wait till this fall. I think that the competition for properties are going to be much stronger. I think that the information that was put out by the CEO or the CFO at National Association of Realtors has a pretty good look on this, and they said by the end of 2025 and into 2026, they are expecting there to be a very strong retail real estate market. Well, when we get into a really strong real estate retail market, it's going to be much more competition for us as investors, which is fine, but we want to take advantage of the market before we get to the heavy competition. Let's get some stuff in the pipeline. We're looking at trying to max out some of our opportunities, make sure my crews are all fully engaged, so that we can, on our side, we're going to wholesale the stuff that we can't do. And I really think that that's, where we can be. And that will make 2025 wealthy for real estate investing. If we take advantage and get busy now and don't just wait for, the market to be on the skyrocket and prices going up. I think we can take advantage of it over this next 6 months and be on the forefront of it. And I think that you'll be really happy if you live by your numbers and get there. Hey, I want to thank you for joining me on this episode of the Whitwam Wealth Real Estate Podcast. As always, I want to invite you to subscribe today and be part of our growing community. Feel free to leave us a review. I read them all. If you have any questions, we'd love to hear from you. You can always find the Whitwam Wealth Real Estate Podcast on Apple Podcasts, Spotify, iHeart Podcasts, YouTube, or wherever you enjoy listening to podcasts. And take a look at our previous episodes. You may find some very good information regarding real estate investing there. This is Scott Whitwam. Be sure to join me on our next episode of the Whitwam Wealth Real Estate Podcast, where we're wealth building through real estate.